Welcome back to Teshkid FX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which at the time of this recording has lost a key area of support at around the $133.2 mark. We have also lost the 20-day MA here on the 4-hour chart, which is now acting as resistance, and I'm now watching our next key area of support at around the $124.9 mark. We have also continued to obey the Elliot wave structures, and before I get further into the technical analysis and also give you my breakdown targets here on the Quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that Quant, after seeing the all-time high, we started the bear market where we had been seeing lower prices in this ABC corrective structure in a move that gave us a low at around the $40.1 mark, and after seeing the bear market low, we started this massive bounce to the upside, obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in blue, having the wave 5 giving us a peak at around the $229 mark, and also completing a larger Elliot wave count 1 to the upside. And after seeing the formation of a larger Elliot wave count 1, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2, where we also expected to see an ABC corrective structure also play out in a move that gave us a low at around the $94.4 mark. And after seeing the low for that higher Elliot wave count 2, whatever we expect on the long-term scenarios is that bounce to the upside in the formation of this wave 3, and sketching out minimum target areas to the upside in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the Fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that higher Elliot wave count 3 at the Fib level 1.618, and that is at around the $396.8 mark, and that is the minimum that I'm expecting that higher Elliot wave count 3 to the upside to do. And in the formation of that wave 3, which is an impulsive wave, I'm also expecting to see a 5-wave structure in formation within the formation of that higher Elliot wave count 3, and you can see that after making our low in the formation of that wave 2, we saw that bounce to the upside in a 1-2 setup, and after seeing the 1-2 setup, we started this Elliot wave structure having that as the first wave, giving us a peak at around the $165.5 mark. And after seeing the high for that first wave, whatever we expected next is a corrective structure in the formation of that larger Elliot wave count 2, and once the low for that second wave is in, then we can expect a bounce to the upside in the formation of this wave 3. And in the formation of that wave 2, using the Fibonacci's, connecting them from the low of the first wave down there to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the Fib level 0.5 and the Fib level 0.618, which is a target area that we fully maximized, and gave us a low at around the $126.7 mark. And after seeing that low, I believe that there are chances that we have seen the low for that second wave, and whatever we are seeing at the moment could be the start of the formation of this higher Elliot wave count 3. But at the moment, at the time of this recording, having lost a key area of support at around the $133.2 mark, then that is now putting a major challenge on the formation of these higher Elliot wave count 3 that I was expecting on the long-term scenarios, and that still means that there are chances of making one more new low in the formation of these higher Elliot wave count 2 in case the breakdown that we are seeing in the market continues. And having lost our key area of support at around the $133.2 mark, there are chances that soon we might see a bit of a retest of that key area of support, and in case we see a retest and the retest is a success, then we can continue breaking down to our next key area of support at around the $124.9 mark. And in case such a move plays out, then I'll have reasons to believe that there are chances of making one more new low in the formation of this higher Elliot wave count 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that makes me extend my target area back to the Fib level 0.78, which is at around the $115.2 mark. And in case we continue seeing the breakdown get to our next key area of support at around the $124.9 mark, in case we lose that key area of support also, then we can expect one more new low in the formation of that wave 2 between the Fib level 0.618 and the Fib level 0.78, and that is between the $125.9 mark and the $115.2 mark. and in case such a move plays out and we get one more new low in the formation of that wave 2, then we can term this whole structure that we are seeing right here as a massive ABC corrective structure in the formation of that higher Elliott wave count 2, where I'm expecting one more leg down in the formation of that wave C to give us a new low in the formation of this higher Elliott wave count 2. So that is what we can expect in case the breakdown continues. But in case we are able to get above our key area of support at around the $133.2 mark, continue gearing up, then there are chances of getting an impulsive wave to the upside in the formation of this wave 3, which is a fractal wave that I had initially here on the charts as a fractal wave within the formation of these larger Elliott wave count 3 that I'm expecting here on the short-term scenarios, where we had seen the formation of that first wave giving us a peak at around the $148.2 mark, and after seeing the high for that wave 1, we saw a corrective structure in the formation of this wave 2, and using the Fibonacci's connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.78, which is a target area that we have fully maximized. And at the time of this recording, you can see we have lost the fib level 0.78, which is now putting a major challenge on the formation of this wave 2. And in case we lose the fib level 0.88 at around the $129.3 mark, then that will fully invalidate this Elliott wave structure. And in case that plays out, then the ABC corrective structure move, that is the move that will be playing out here on the Quant chart, where we can expect one more new low in the formation of that wave C, and also in the formation of that larger Elliott wave count 2. And once that plays out, then we can expect our massive bounce to the upside in the formation of that wave 3 to continue. So that is what I'm expecting here on the short-term scenarios and also on the long-term scenarios. And also taking a look at the indicators on the RSI, we are trading at around the 36 mark, meaning we have massive room for us to fully support higher prices, and also any movements to the lower side to give us one more new low in the formation of that higher Elliott wave count 2 will still be supported. Also taking a look at the MACD, we have been able to print a bearish cross, and we're also seeing a bit of an increase in the selling momentum, suggesting a bearish movement could continue here on the Quant chart. So let's continue watching our next key area of support at around the $124.9 mark, because that is a key decision point here on Quant, and I'll be keeping you updated.